elected officials have little or no knowledge or background in terms of accounting. So when they are elected to a board or a council, they generally come in with a misconception as to what the auditor is there to do. And we spend a lot of upfront time educating them as to what the purpose of the audit was, and then obviously on the back end, what the results of that audit was. But there's a big disconnect between financial statement audits, fraud audits, the scope of one versus the scope of the other, and the expectation of a governing board as to which one they're actually engaging us to perform. Essentially what we have to do a lot of times is educate board members, city councilmen as to what a financial statement audit is. Typically they have the misconception that an audit is going to disclose all frauds, all instances of fraud, and typically that's not at all what a financial statement audit is designed to do. There is a level of materiality which an audit is designed to detect fraud, but that's not the primary objective of a financial statement audit, which is to render an opinion on the numbers as to whether or not they're in accordance with generally accepted accounting principles. So frequently we have to get into an educational process to let them know what the expectation level should be for the financial statement audit. Generally it's going to be required either by bond covenants, city ordinance, state statutes. There'll be a governing body that dictates they have an audit. Now the city council or the board of county commissioners or whoever's requesting the audit is simply complying with their own standards. We can design a fraud audit to be much more like a rifle shot versus a shotgun shot for a financial statement audit. So in basic terms, a fraud audit is going to be much more narrow in scope. It'll be designed to specifically determine whether or not a fraud occurred and the magnitude of that fraud. Whereas if fraud is detected in a financial statement audit, that's really a byproduct of the engagement as opposed to the specific purpose of the engagement. And if it's a fraud audit specific, there's either already an acknowledged instance of fraud or a suspected instance of fraud, as opposed to a financial statement audit, where there is no anticipated or known instance of fraud, but the audit is designed in such a way that if the fraud is of a material amount to the financial statements, it should detect that fraud. But most frauds are far below what is material to the financial statements, and that's why a financial statement audit is not specifically designed to detect fraud. Whereas most government officials have the impression that if they hire an auditor, that's what the auditor's primary purpose is determine whether or not a fraud occurred, and that's really not the case.